Hello traders, Gary Wagner here, approximately 11:40 in Honolulu. It is Wednesday, the 25th day of July, 2012, and this is the daily report for gold and silver. Nice showing today. We'll talk about the fundamentals in a minute, but we do have the metals trading strongly higher, I would say, up about $23 to $24 in gold, breaking above 1600 most importantly. We'll talk about that barrier in a second. High to 1612, low 1579, up 1.5%. Silver up about 1.41%, currently trading up 38. 2744 cash, 2675 low, 2750 is the high. Buy on rumor, sell on fact. That is the underlying assumption, and what we saw today really more than anything else was factoring in a premium based upon the following assumptions. The first thing is there is an issue going on in Europe right now, and there was a news report that one European Central Bank Council member saw arguments in favor of granting the European Stability Mechanism a banking license itself. The second thing was an article that came out in the Wall Street Journal in which they spoke about the fact that there is real potential for some sort of monetary easing by the Federal Reserve. And as one analyst put it, they put up smoke signals and people around the world listened. We're looking at a 120-minute Henkin-Ashi chart, 2 hours for each bar. We'll go into a daily in a second so we can see the bigger picture. But what we're witnessing here, and if we take a look at the market in terms of its trading activity, you can see without a shadow of a doubt the kind of moves that we saw. Now, atypical of the market, and I believe that is possibly because it was trading so sideways at one point, but we didn't get really that tight consolidating V candle that we will typically see, or V-shaped bottom that we will typically see. This breakout here started rather slowly. You can see that the candle size was about a medium. We compare it relative to usually the last 10 or 15 candles. They went smaller, and then slowly it began to build up steam. And you can see that right before it hit 1600, this is 1590 right here, 1600 is right here. But just as it began to cross that 1590, look at how the body size on these candles begin to really go into a large size candle, indicating that there was some real strength going on in this buying spree that we saw in gold. Now, when we reduce this, or compress the chart, I should say, and one thing you do want to take notice of, and that's the MACD. First of all, you can see how it broke out and is moving up, and it's moving apart in terms of the lines itself. Let's take a look at some of the critical areas and how they're reacting. The first area right in here, 1585 or so, cuts through there pretty easily. Our next real level of resistance is going to be based upon these tops at around 1590. And you can see on a closing basis, 1596, let's say, that top was exceeded. If we draw a line from this particular point, meaning this top, and this is, I'm just looking at areas that would cause some resistance, it's pretty much traded through there. The next real level of any kind of resistance, traders, and this is based upon the fact or the assumption that on a closing basis it closes well above 1600, forms a base. The next real target is going to be 1625, and 1620 and 1625, and that's really based upon these tops right in here. These tops right here are at around 1635, so they're a little bit higher, but historically speaking, those are the areas that we would probably look at for resistance if this market continues on this upward trend as we build profits on our current trade. Traders, will step back right now, look at our daily chart, Henkin-Ashi format with some Elliott wave lines as well as fib retracement. Support band, quite obviously, it seems to have held our upper line resistance. We're not close to it yet, but if you take a look at the marketplace where it's trading at right now, and the fact that it has formed that really strong good base, consider this. 1620 is going to end to 1635 is going to be right in this area right here. It corresponds to these tops. and this of course is just below 1700 here. As I said, I would look for some resistance right in here to see how it reacts. But what is critical is that as this market has been trading and teetering at the support level, you can really see genuinely how long it was able to maintain some sort of support level above this price point. We are looking at a 700-minute chart, spot market gold. This is just cash. And we can really see when we look at the market through this time frame or time parameter, how nicely it formed a base down in this support level. We can also see we're still a ways away in terms of this upper level resistance area. Now, if we go ahead and extend these lines, it's very easy to see that we've got quite a ways to go before we hit this upper level resistance. I believe that our first area, as I said when we looked at our daily charts, is going to be based upon these series of tops right in here. In terms of a technical basis, historical technical basis, it's got to overcome this 16, call it 1630, 1640 area, depending on where it lands in terms of this resistance line, because this resistance line of course goes lower through time as the support goes higher through time. But my sentiment is that if we're able to cross above this particular point, I really believe there is a real likelihood that we'll get our fourth or maybe even the thrust that breaks through this one particular point, meaning our upper level resistance. An equally nice showing in the silver market as we see both precious metals moving up about 1.5% based upon rumors of the Fed having some sort of QE3. Something came out from the Wall Street Journal, as well as the scenario going on in Europe. You can see on this 120-minute chart, cash silver, that like gold, we had a strong move to the upside. The one thing that you'll notice though is it seems as though the candlestick size, these Henkin candles, are a little bit larger when we compare them to gold. In other words, there was more of kind of a spurt at the beginning, and we can see that this is our first sign of any kind of potential, call it resistance. And in terms of what we're looking at in this market, all we really need to do, it's quite easy. If we just 2750, we follow these series of tops, and the tops that I'm speaking about are these data points right in here. We are at that point right now. We'll have to see how it reacts and if it can push through. If it is able to push through, the next real strong level of resistance is not going to appear till we get over $28 per ounce in silver. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.